Коллеги, добрый день.
Good afternoon to you, colleagues. We're very happy to see you. Let us begin the press conference by the chairwoman of the Bank of Russia, Elvira Nabiullina, and the deputy chairman, Alexei Zabotkin. And to start with, we'll hear the statement by the governor following the board of directors meeting. Good afternoon. Today we have made the decision to raise the key rate to 21% per annum. Price growth has accelerated since September. Inflation expectations have risen as well. Lending has continued to grow rapidly. Due to limited labor resources and high capacity utilization rates, enterprises have been increasingly experiencing problems with expanding their output of goods and services. Moreover, the government has announced an additional increase in budget expenditures this year, as well as a more considerable tariff indexation and a rise in the recycling fee. Some of these factors have already translated into high inflation in the current year, that is to reach 8 to 8.5%. Some of them will materialize later. We will need a significantly tighter monetary policy next year in order to curb the accelerated price growth. A higher key rate path is expected to bring inflation back to the target. I would now dwell on the reasons behind our today's decision. Firstly, inflation. Overall, we can see no signs of its slowdown. In September, current price growth sped up again, largely in terms of its underlying component. Core inflation, one of its indicators, exceeded 9%. Inflation expectations increased significantly, reaching the highest level over the year among households. Businesses' price expectations were up as well, most notably among retailers. This is yet another indicator of the elevated price pressure caused by demand-side factors. In the next few months, price growth rates will also be affected by a recycling fee increase. This will have a substantial impact on inflation, given a large weight of passenger vehicles in consumer expenditures, which accounts for 4.6%. Another pro-inflationary factor is the rise in housing and utility tariffs and rail transportation rates at a pace that is significantly above the inflation target. This is another argument in favor of additional tightening of monetary policy. Taking into account our decisions, the annual inflation will equal 4.5 to 5% next year. In the future, tight monetary policy is set to ensure steady disinflation and return the price growth rate to 4%. Secondly, the economy. The economy continued to grow in Q3 24, although at a more moderate pace. In the previous statement, we noted that the slowdown in economic activity might be associated not so much with a cooling demand, but rather with more severe constraints preventing companies from expanding the output of goods and services. Strengthening inflationary pressures are an additional evidence that the slowdown in economic growth is largely associated with supply-side constraints rather than with the demand dynamics. As regards demand, its increase slowed down somewhat in July-August in terms of consumption and investment. However, preliminary data in economic activity for September suggest that this process has not become sustained so far. According to our monitoring of businesses and the evidence from our regional branches, consumer activity remains high. Monitoring of businesses also shows that companies expect a further rise in investment activity. Another factor supporting demand is the announced rise in budget expenditures this year in the amount of 1.5 trillion rubles. As to increase in the output of goods and services, the problems hindering these processes have become more acute. Available production capacities and labor resources are being used increasingly intensely. The labor market remains tight. Moreover, according to a recent business survey, the problem of staff shortages has become even more severe. The seasonally adjusted unemployment rate in August stayed close to its record low of 2.5%, while wages were still rising faster than labor productivity. There are also other supply-side constraints that are both of a more general nature and related to particular industries. In addition to staff shortages, companies have been increasingly facing other challenges, such as logistical bottlenecks and more complicated supply chains. As regards constraints in specific industries, they have affected the oil and gas sector due to the voluntary production cuts under the OPEC Plus agreement, as well as agriculture, which suffered a decline in yields caused caused by severe weather conditions. Even as demand is cooling somewhat, the output gap in the economy does not diminish due to persistent supply-side constraints, which is exactly what is generating elevated price pressures. Now, as regards monetary conditions. Since our previous meeting, the yield curve of federal government bonds has shifted upwards across all maturities. Higher long interest rates suggest that market participants' doubts that inflation will return to the target over the medium term have intensified. In other words, their inflation expectations increased again. For us, this means that monetary policy should be more restrictive. Overall, monetary conditions have tightened. However, given rising inflation expectations, the tightening of monetary conditions in real terms has been less considerable than that reflected in nominal interest rates. I would like to stress that the level of tightness should be measured exactly this way, that is, by subtracting expected inflation rather than its actual rate over the last 12 months from the level of interest rates. So far, we cannot observe a notable slowdown in overall credit activity. The fast increase is mostly accounted for by corporate lending. This segment is less sensitive to key rate rises, as a considerable proportion of loans are issued under subsidized programs for project finance or to complete investment projects and government-supported projects that have been launched earlier. Nevertheless, the demand for loans at market interest rates has been weakening. Retail lending has started to respond more notably to the key rate increase, tougher macro-prudential measures, and the termination of the non-targeted subsidized mortgage program. The monthly growth rate of the retail loan portfolio has halved compared to May-June. Households' demand for time bank deposits was up in August and September. As before, rising incomes allow people both to consume more and save more. Our today's decision will increase household saving activity. In our updated forecast, we have raised the estimated growth rate of lending to 15-18% for this year and up to 18 to 13% for 2025. The main driver is a faster rise in corporate lending. Now I would like to speak of external conditions. Global economic growth has been decelerating. This implies a more moderate increase in external demand for Russian export goods. There are two factors having opposite effects in the oil market. On the one hand, rising tensions in the Middle East have pushed up prices. On the other hand, a slower expansion of the world economy has been decreasing the demand for commodities. We have reduced the forecast for oil prices for this year by 5% to 80% per barrel. The forecast for 2025 has been left unchanged. As to the forecast of the current account balance, there have been no significant changes over the three-year horizon. The updated forecast of the balance of payments takes into account actual data. In Q3 24, the value of exports remains stable, whereas the value of imports exceeded the expected level, which has affected the ruble exchange rate. In the future, the key rate increase will be containing imports by cooling domestic demand. I would now dwell on the risks to the baseline forecast. Broadly, the range of these risks has stayed the same in the first place. These include the demand and supply gap caused by persistent demand overheating or by an increase in constraints limiting the capabilities to expand the supply of goods and services, primarily because of staff shortages. Furthermore, there are still risks related to foreign trade, geopolitical events, and inflation expectations. As to disinflationary factors, these are a faster reduction in demand and a more considerable increase in the economy's potential and labor productivity. Winding up, I would like to comment on the future path of the key rate. The economy has been facing serious shocks over the past 3 years. Enterprises have been forced to rearrange their production and logistics chains or even establish new ones in many cases. These conditions inevitably entail sharp changes in relative prices, which enables businesses to adjust to the new reality rather quickly. Over the past 3 years, prices have risen by 30%. However, the structural transformation in the economy cannot any longer explain the price increases over 2024. They were induced by more severe overheating of demand that was expanding faster than supply. Amid labor shortages and high capacity utilization rates, any further attempts to refer to the increase in prices as a prerequisite for structural transformation will cause a dangerous high inflation situation in the economy that will create considerably more problems than benefits. In other words, price rises will become a factor constraining the development rather than a way to adjust to the new environment. The Bank of Russia remains determined to return inflation to the target of 4%, despite a rather notable increase in the key rate. Annual inflation this year will be twice as high as the target. However, this does not mean that the key rate is inefficient. If not for its increase, inflation would have been much higher. Anyway, how can that considerable deviation of inflation from the target this year be explained? Amid the heightened uncertainty of recent years, the effects of many mechanisms in the economy have changed. We see several reasons why the response of inflation to the rise in the key rate has become less pronounced. First of all, this is the increased inertia of inflation expectations due to the fact that the inflation rate has been exceeding the target for 4 years already. The longer the period of the deviation of inflation from the target, the less confident households and businesses are that it will return to the low level. This is reflected in their behavior, propensity to consume, invest or save. The second reason is the impact of expansionary fiscal policy, including as a leverage for taking out loans for those households and companies whose incomes grow due to fiscal spending. The third reason is a range of factors in the banking sector. Regulatory easing measures have made it more possible for banks to expand lending aggressively, neglecting the need to maintain a more liquid asset structure and to additionally accumulate capital buffers. Finally, this is the Bank of Russia's inaccurate communication at the beginning of the year. Our forecast assumed a reduction in the key rate following the slowdown in inflation. However, that was largely perceived as our intention to cut the key rate in any case. This motivated households and businesses not to reduce their demand for loans. These are very different factors, but all of them have had the same effect. Consequently, overheating in the economy has turned out to be stronger, which has led to faster price growth. Therefore, to achieve the inflation target, we will be responding to pro-inflationary risks in an even more conservative manner. The level of tightness of our monetary policy will be determined by the objective of bringing inflation down to the target. We will need a considerably higher key rate path than we assumed in the July forecast. The key rate will average 17.5% in 2024, 17 to 20% in 2025. In 2026 from 12 to 13%. In 2027, it will reach its neutral range of 7.5 to 8.5%. Thank you for your attention. Now, dear colleagues, over to your questions. Don't forget to introduce yourself and identify your agency. Rita, in the first row, please. Thank you very much, Richard Plesky, TAS Agency. Elvira Nabiullina, could you please tell us whether today any arguments have been voiced to raise the level above 21%, and do you allow for the same kind of resolute measures or steps and decisions during your December board meeting? Well, I can immediately tell you that we've reviewed 3 options to raise the key rate to 20%, to 21%, and above 21%. The option to keep as it was, nobody proposed it. But we discussed substantively the options to raise the key rate to 20 and 21% level. The possibility to maintain that kind of a stepwise will depend upon the data that is going to come, covering the economic development, inflation, inflationary expectations, the lending development rate. So we do allow for the possibility of an additional key rate rise in December. Colleagues, please, your questions. Nastya, in the second row. Anastasia Saveleva, Interfax Agency. Do we understand correctly that, your target has been defined not by a very specific marker of 4%, by the phrasing of close to 4%. So do I understand correctly that for next year, your inflation forecast means that you are deviating from the target? And my other question is, what are the basic factors that you would describe presenting substantive pro-inflationary risks? Is it the fiscal system and the spending, or together with the utilization fee and the tariffs, and how strong the depreciation of the ruble exchange rate impacted the inflation expectations? Thank you. With regard to the inflation target towards the end of the year, considering the current price growth, we believe it is going to be close to 4%. But the full year, I think we're going to be reaching the target in 2026. Yeah, in the first half of 2026. Now, as far as the basic pro-inflationary risks and factors are concerned, I've just described them. The very basic one is that due to different reasons, the supply and demand disbalance is going to sustain. These could be factors brought about by the fiscal system. We've been always saying that budgetary changes constitute an important factor that we account for, and that will depend upon the pace at which the lending activity is going to grow. From the point of view of the monetary policy, it is important for us to really consider that rather than separately retail and the corporate sector. Another important factor, definitely inflationary expectations, which regrettably do remain high and even have risen further. Would you add something? I think I covered it. Now, as far as the utilization tariffs are concerned, you also specifically asked this question. If you believe the direct effect from it to be the one that adds about 1%, aggregate percent, to the inflation, but specifically our monetary policy is set to deter these effects in the secondary ones as well, because both the utilization fee and the utility tariffs growing further constitute an important factor impacting inflation expectations, and through that impacts the overall price growth. So we need to respond through our monetary policy to such matters. But we all take this into account. The multiplicity of these factors is what we're going to take into account in our future decision making. Oh, yes, sorry, about the depreciated ruble. I've been reminded here. Right, so as far as the impact from the exchange rate, we do take into account as well, because truly over the past few months certain weakening occurred, but as far as the carry forward effect is concerned, we never changed our assessment. The exchange rate changing by about 10%. I think it's 0.5% in terms of its conversion into inflation. But if you take a look at more extended exchange rate trends, our exchange rate is at approximately the same level that it was a year ago. It has been volatile in the course of the year, and we do take it all into account whenever we analyze the situation. Thank you, dear colleagues. Your questions. Oleg in the row last. Oleg Sapushko from Kommersant. Could you speak up, please? Yeah, I'm sorry. Oleg Sapushko from Kommersant. What I wanted to ask you. We do see that the central bank, by keeping its independence, nevertheless, is involved in different meetings with both the cabinet and the government to somehow coordinate, being able to avoid the inflationary risks that you referred to. So how this coordination can be described? How does it work, and how difficult is it becoming against the eruptions of the fiscal spending that all of a sudden occurred one of those days? Well, our interoperability with the government take is on a very constructive footing. We do exchange our views over the development of the economy in the form of meetings and working meetings. We explain the rationale behind our actions. I think we hear each other. At least we understand our mutual whereabouts, and we do discuss the current environment as well as the forecast. At some points, these could really very much converging. At other times, they may diverge. That is quite natural. So we make our decision on the basis of our own forecast, because this is an inextricable element of the inflation targeting regime, because we have our own forecast, which we're updating 4 times a year. And of course, the budgetary decisions are very important to us. I never cease to say it, and as well as the predictability of the fiscal policy. And another very important factor which will help to curb inflation is the fiscal rule and the compliance therewith. Now, with regard to some of the decisions which emerge, indeed, you see, I simply know from my previous work, from my previous tenure in the government, currently many decisions about the additional fiscal spending, they are, being cleared in the very last minute in terms of the validation. So the final figures, we learn of them once they are finalized inside the cabinet. But during the last board of directors meeting, we were aware that some discussions were going on and certain risks could materialize, and that was why we underscored one of the basic risks within our baseline scenario, the possible change in the fiscal policy. But to take these decisions in our decision-making only once they are announced and we can fathom their impact and size. And that is basically what happened immediately before our today's board meeting. Dear colleagues, Tatiana, the last row before the last one, Tatiana Voronova, Frank Media. I've got 2 questions. The banks in their private conversation are saying that one of the most effective instruments against inflation that central bank has in its toolkit is the short-term liquidity standard. And amongst them, nobody expected that this instrument would be working so well. But at the same time, we do ascertain that against the Rooney rate that is currently lower than the key one, it has been there for quite some time. We do see that the banks do rate their deposit rates at the level of 22%. Now, what's interesting is what is the way that the central bank can explain to itself the disbalance between such rates out in the market, because the banks are talking about a certain shortage of standard liquidity, which really pushes the price wars in as far as the depositors are concerned. My second question is very quick. In the financial sector, we do see a lot of transactions when shareholders sell out of their businesses to the management, but we don't see anything like that in the banking sector. Have you come across any such management teams in the market for whom you would approve their MBOs? Well, let's see. As far as the short-term liquidity standard is concerned and certain efficiency within this instrument, by the way, when in my statement I was talking about the reasons that I referred to, trying to explain why the inflation didn't respond so quickly to the raise in the key rate. If you noted, I mentioned as one of the factors the weakening in the banking regulation. And this easing enabled the banks, indeed, to be more aggressive in lending out, as opposed to there haven't been any easing like that, because some of the banks were quite actively using it, some not. But the short-term liquidity standard, this is not a tool to fight inflation. It's the key rate that helps fight against it. Nevertheless, once we suspended these easings, its application, its normal shape can produce a certain deterrent factor over the lending activity. We do take into account, but going back to it and defining its parameter is not related to the task of fighting inflation. It's only there because the banks need to support a necessary level of high liquidity assets, so that in case of any stress environment, let it not be very probable, but if there is a huge withdrawal from the banks, they should have liquidity cushion. So that is a prevention measure, because currently we see that they're moving back to a normal standard. Now, in terms of us coming back and easing the short-term liquidity standard, we announced it well in advance, but unfortunately not all the banks were ready, hoping that otherwise we would be on our back foot. But no, in some situations, they have to catch up. They do, catch up on the lost time, as Mr. Zabotkin has just said. And once again, I wanted to emphasize you were very correct in saying that to a certain extent you can describe it as a shortage of a liquidity standard, but we don't have it in terms of the thing. Now, as far as MBOs are concerned, I actually do recall that some time ago there was a management in one bank who wanted to buy the business out, and we do consider such options whenever we have them submitted. But we have certain requirements set forth by the law, so we need to understand it, that an acquirer of a bank must possess a sufficient level of clean assets so that in a difficult situation to support this banking institution. So if the bank managers might have such a level of assets to support the bank that they claim they can buy out, well, if there are such propositions, we will definitely look into that. Thank you. Next question comes from Abakan from Polina Nazarova, RTC TV channel. Polina, go ahead. Good afternoon. Could you please tell us the result of the high key rate was a serious growth in terms of the households' deposits in the bank at a very attractive interest, which is something that the businesses also do. I mean, businesses take out it from their turnover and put it in the bank, which means that the economic activity is diminishing. In such a situation, to expect any supply that would be keeping up abreast with the demand, one shouldn't. And so what does the Bank of Russia think about such a risk? Thank you very much. I understand your concern with the fact that the economic activity of the businesses should continue. But to think that the money which is placed into deposits in the bank is funneled out from the economy is not correct. Deposits is the main source of funding bank lending activity. If you take a look at the current stats, currently in the banking deposits, businesses and households have placed 116 trillion rubles, but that money is not just lying still, because this is the money that banks use to fund a portfolio of credit in the economy, which is 122 trillion. The banks also invest into the corporate bonds, which is also 7 trillion rubles worth. Credits and bonds represent the sources of financing business activity. I mean, some of the loans are being given to the businesses and the households. And so that is the basic function of the bank, to raise temporarily free resources that the economic players have, not all have, but some do, and redirect these to those who need them, who know how to invest them. For example, if a company places money into a deposit expecting a better time to use this money, it means that this money is funding the credit for the business which has the capacity to expand its business operation right here and now. The same kind of Brownian movement in terms of the resources and capital towards where that money can be used. Like, for example, relocating your employees to where you would definitely feel a stronger shortage, and that's where the wages are higher. So in the economic sense, that really is no different from the situation. For example, when a business which has free money, instead of putting it into a deposit, pays it in the form of dividends, while the shareholders who receive such dividend would buy corporate bonds, which were issued by the same kind of borrower. You would immediately describe it as an investment, but in the case of a credit, that looks slightly different. Another question was with the deposit growth rate. I mean, the amount of money in the corporate deposits are currently growing slower than those on the household deposits from the beginning of the year. the corporate deposits grew by 6%, while households by 15%, which actually, nevertheless, is twice as high compared to last year. And amongst other things, that can be explained by growing incomes and by the willingness to place money under higher rates. Dear colleagues, Masha, please. Maria Kudryavtseva, Russia 24. Elvira Nabiullina, according to the new forecast, inflation in 2025 towards the end of the year is going to be 4.55%. Now, my question, if inflation is going to be within this range, can one say that this is a signal towards the cycle of reducing the key rate, and how long the inflation must stay at such a low level in order for this cycle to be started? Currently, the experts say in their forecast that sometime in the summer of 2025, one may expect that the cycle may be kicked off, and towards the end of 2025, it could be at about 16%. The fact that the inflation will start demonstrating steady decline, and we will see that it is going down according to our forecast, that is indeed could serve as the signal for the key rate to be reduced. Now, when it is going to happen, we are not able to tell you, but you can take a look at our forecast for the average key rate for next year. And this forecast states that a certain reduction of the key rate next year quite possible against such an inflation reduction. But once again, I would like to underscore, considering the lessons from the past, as they say, when in the beginning of the year we were expecting inflation to go down and the key rate, everybody expected to follow suit. Regrettably, many perceived it in such a way that the rate is going to go down in any case whether inflation is down or not. So right now, it is crucially important to watch out for inflation. If it demonstrates a stable decline, then indeed the key rate can be brought down as well. Just to elaborate this premise, those who believe that inflation next year is not going to decline must not expect that the key rate is going to be brought down, because it is not really should be the case that next year the inflation will remain as it is now, but the key rate towards the end of next year is going to be lower than it is now. So it's just not naturally possible. Marina, please. Marina Pimenova, NTV Business News. Businessmen never cease to say that the central bank, by raising the key rate, is decelerating the economic development. Recently, we heard Alexei Mordashov from Severstal say it. So what do you think about his argument that inflation at about 8 to 9% wouldn't be so really a fearsome thing for the economy? Currently, it is at 21%. And that one must really bring back the discussion about the impact of the key rate and inflation upon the economics. Another question. Currently, we've got the key rate at 21%. In February, March 2022, the rate was 20%. So what we should think about it? I mean, right now, it is worse, or will it be even more worse than now? Well, I believe the discussion about the impact of key rate upon the economics never subsided. We know that the key rate impacts in inflation and the other way around, but against the overheating demand, it's really more impactful upon inflation rather than just decelerating the economic growth. And, it is very important to be mindful of the macroeconomics and the business, because every business believes that if it can get laid hands on cheap money, then by investing it, if not the whole, well, then just some significant piece of the economic pie can be turned around and the economics will grow. I mean, this view is well justified in an environment when there is a decline, there is a free capacity, there is free labor, and indeed, within such a period of time, we pursue a soft monetary policy in order to sustain such an effect. But in a situation when the economy is overheated, when unemployment continuously updates its record level, that is something that won't play. Now, can the reduction of the key rate can help such companies increase output? I mean, it seems like that it can, to some businesses, but overall for the economics hardly likely. And why so? Let me give you a few more details, because this kind of rationale is something that is broadly very commonplace. And let me explain why this kind of an effect is not going to happen, the one that some businesses hope for. For example, a company received cheaper money, so 3 ways to spend it, unless it goes to the currency exchange market, because we don't know it. If a business indeed seriously wants to invest into labor productivity, into expanding its capacity, so basic 3 ways to go. The first one is to bring in additional labor if it has production capacity to increase the number of shifts, but there are no free hands, vacant or unused hands in the economy. You can use a cheap loan by luring people from a different business by offering them high wages. But we're saying that the whole economy receives cheap loan, and so that business also can get a cheap loan and also raise wages. And so there's going to be a race, in between different wage offerings without any growth in labor productivity. And so the overall economic growth is not going to accelerate. Now, the second way to go, indeed, to increase the labor productivity, buy equipment for that. Let's take a look at the option of the domestically made equipment. But in order to buy domestic equipment, you also need to additionally manufacture it as compared to what we have now. But for that, the manufacturer also can get a cheap loan, must hire new labor, and what would all lead to, like in the first case, the same kind of prices growing for equipment, longer lead times to supply overall in terms of the machines, and they're not going to be produced more in the country, but the buyers will really have to pay through the nose because the equipment is going to be much more expensive. That's exactly what we're seeing right now. If you take a look at the reporting disclosed by businesses and companies, it's not that they're credit interests grow, but the labor payment and fixed asset purchases. The next one is to buy imported equipment, but we can buy as imports only whatever our export capabilities can give us. I mean, in terms of the amount of US dollars, of course, for the same amount of dollars, again, many companies may compete for it by offering more rubles, which would bring about a depreciation of rubles and the same pro-inflationary effects. But the equipment, with the price measured in dollars, is limited by your export capabilities. So against a very strong shortage of physical resources, as what we're seeing now, the only result of cheap funding will be an even more acute competition between businesses for such resources, prices for them growing, prices growing for the end product, and that is going to be an inflationary spiral. So, of course, from the point of view of an individual business, something that may seem as a simple solution in the overall economic may lead to opposing results, and this is something that one definitely must not try and get to. Of course, high inflation, even beneficial somewhere, because it makes the life of the companies, the ones that are monopolies, less problematic. I mean, where the demand is not elastic, you can raise your price and still your products are going to be bought, and you can basically translate everything into the prices. And the households are going to be paying for all of this. That would simply be these companies will be able to develop and retain their profit-making at the expense of the households, and that is why we have an independent central bank which is overseeing the price stability in the interests of the businesses and households. Another interesting point, recently we conducted a survey in terms of the interest payments, how that affects the business economics. I think we analyzed the data from 300,000 businesses, because this is really an ongoing argument. So what this data shows, and I think we're going to be making them, we'll publish them shortly. A company which produces 1/3 of cost throughout the whole country, they don't have any interest spending. They leave off financing their development out of their own pocket because of great efficiency, because of a very good capital yield. They are developing, and so in this sense, and these are basically the kind of companies which are effective as managers, and so against such structural changes, of course, they're able to grab the bigger part of the market, as opposed to those who are inundated with loans and credits which do not conform to their capacity to do good with that. You also asked a question about the level of the key rate now in the beginning of 2022. Let me remind you that in 2022 we raised the rate to 20% in order to nip the risks of the financial stability in the bud. That was not a pro-inflationary measure. That was to stop the outflow of resources from the banks. And so when the task of financial stabilization was completed, we were very quick in reducing the interest rate down to 7.5 to support the economy. Currently, it's the reverse. We are raising the key rate in response to the growing inflation and the growing inflationary risks. Thank you. Next question comes online from Denis Yelahovsky. Good afternoon. I've got two questions, if I may. What additional mechanisms, apart from raising the key rate, can be utilized by the Bank of Russia in order to deter inflationary growth? Aren't we right now in a situation when, through just the efforts undertaken by the central bank, without any tangible support from the government, without any supporting other economic measures, it would be hardly possible to deter inflation? My second question comes from my subscribers. Now, the level of the banking deposit, is it growing fast right now? And very common two questions. To what extent that might endanger the banking stability? I mean, if the banks bring in deposits at 20% and they need to issue a comparable volume of credits, 20+% for that, and the Bank of Russia specifically is fighting to reduce this lending, and this amount of accumulated deposits among the household, is it not a threat in terms of really spiraling the inflation once the Bank of Russia will decide to start bringing it down? Thank you. So your first question was about our joint work between the cabinet and the bank to reduce inflation. I believe that we are a unanimous view with the government that there are certain measures that the central bank does, as well as the government, to impact inflation, because inflation, it's about the balance between this equilibrium between the supply and demand. We're at the central bank. We influence the demand. It's also the fiscal policy that influences the demand. So, and responsible fiscal policy and compliance with the fiscal rule is an important factor which will enable one to reduce inflation and bring it down to target. But, as they say, the government in its hands has certain tools that are impactful upon the supply side. And I believe that it is important for all of us to debottleneck such situations as the labor shortage, bottlenecks in the infrastructure, incentivizing labor productivity, investment into productivity growth. So each one should do the right job under the mandate that they have been granted. But it is true that with the government we're really very much together, working over a broad set of issues, but each one of us makes up his or her mind independently. And now, and as far as the quick growth in the volumes of the banking deposits and the interest rates, how that impacts financial stability in the future, we don't see any risks to the bank's stability. The banks are very well aware if deposits become more expensive, while loans can be offered only at a higher rate, so the demand for such loans is going to fall. And that is exactly what should happen, considering the transmission mechanisms and inflation reduction. Regarding this common concern, it's not the first time we hear about it, that the banks are accumulating a certain deposit overhang at the high interest rates, which overnight would kind of leak out into the consumer market. I mean, there is no reason to feel such a concern. Once the time comes, we will start reducing the rate in such a way so that both consumer and investment activity would be gearing up, but correlating to the possibilities to expand the output of goods and services. Besides that, I said that the deposits serve as the source of lending, and so you need to take this into account as well. Mr. Zabotkin, it seems to me that Denis had another story in his question, i.e. that if the bank charges accrues interest on the deposit 20%, against that the credits should also grow really fast. And so it is important to note one thing, and the governors mentioned it yesterday: deposit interests are being paid to the bank at the expense of the interest that they receive in payment for loans. So this is not new money. This is the money that has been written off those who have borrowed money from the banks and put into the accounts of those who hold their money in the bank. And so as a result of these two transactions, payment of interest on lending and to deposits, money mass doesn't grow. Money mass grows only as a result of credit activity, and a very tough monetary policy is definitely going to hold back the lending activity growth, and along with that, the growth in the level of deposits. Thank you, colleagues. Elena Fabrichnaya. Elena Fabrichnaya, Reuters. The central bank started reducing the limit covering the currency swaps. Doesn't mean that the situation with the RMB liquidity has normalized or the reverse of it. And my second question is whether the central bank can see the recessionary risks in the civil sectors because of the high interest rate. And my third and last question: what is the probability that 21% will become the peak of the current cycle? I will start from the last question. The probability that it will become a peak is hard for us to assess, but once again I shall underscore that we will be making a decision in case there will be a need to reduce the key rate in order to return inflation back to target. And once again I shall repeat, we do allow for the key rate to be raised during the next board meeting. With regard to the recession risks, our recession principally is about the whole economics rather than any individual industry, and our GDP in our forecast demonstrates growth. That is why the recession risk, we don't put the recession risk into our forecast overall for the economy. Now, with regard to reducing the currency swap limits, we do believe that in many ways this is a reflection of the fact that the situation has normalized, because our swap before now has often been used as an instrument to fund currency-denominated lending at the time when the external yuan markets became also restricted and the companies were issuing loans, raising short-term funding. Since then, the banks have really improved their situation, and it has normalized with regard to the currency swaps. Thank you. The next question online comes from Evgenia Pismenaya, Bloomberg. Evgenia, please. Hello. I've got a question about the additional 1.5 trillion rubles that have been mentioned multiple times. To what extent this new spending is reflected in your assessments and forecasts in September, and how strongly that might affect the rate path over the next 12 months? If there weren't this 1.5 trillion, could the rate have been 20% rather than 21%? This is my first question. My second question is about the 23% in December. You said that it may happen. What must happen by December in order for the key rate to be at 23%? That was my second question. And the third one, already the United States now is saying that it's going to be using the Russian frozen assets. How are you going to respond to that? Can you already tell us when and how you're going to respond to it? Thank you. As far as accounting for the additional 1.5 trillion rubles when making our decision in September, well, by that point in time, the decision wasn't made. There was no specific figure in mind, so that was why we didn't consider this in September. But once again, in our risks of the baseline scenario, we were talking about it, we were written about it, because we felt that there would be a probability like that, but you can only account for such a decision once it is made, and the size is clear. Now, in terms of this factor impacting the key rate path next year. This is one of them, actually. And in terms of this additional resources in the budget, the main impact is over the inflation of the current year, because we're already thinking it has partially implemented itself in the higher inflation that we're currently seeing, and that the end year inflation is going to be 8 to 8.5%. Well, certain elements may be carried forward to the next year, but the basic effect from this 1.5 trillion is something that influences inflation this year. Now, next year, as is expected, in accordance with the announced parameters, the fiscal policy is going to, do a disinflationary effect, so we take into account. But again, making our decision about the key rate, it is impossible to cut out just one factor. We consider multiplicity of them. It is also impossible to give you an answer of what the rate would have been without this 1.5 trillion, because really pro-inflation risks really have emerged, many of which we had warned people beforehand, so we're just witnessing it. Now, as far as the possible rise in the key rate is concerned, well, right now, theoretically, I suppose it's impossible to discuss what the future board of directors' decision may be, but on more than one occasion we've shared certain important indicators that we pay attention to when making a decision about the possibility to raise the key rate. That includes stable inflation, inflationary pressure, inflationary expectations, generally speaking, a gap between the supply and demand. So we'll continue analyzing this situation in a very complex way. Can you add something? As far as response measures are concerned, as I mentioned previously, the response measures are being discussed by the leadership, and I suppose a certain decision is going to be made. Colleagues, please, Grigori. I've got two questions. The first one is about other kinds of tools that the central bank has in its kit. Why, I mean, it's just the rate, why don't you toughen certain different macroprudential requirements? Possibly these could have become more effective, or maybe you just see certain risks related to this toughening that a person in the street doesn't notice. Second question, it is known that the effective monetary policy is rarely a neighbor to the aggressive fiscal policy. To what extent do you believe that the current draft budget for the following 3 years is disinflationary? Well, the basic instrument is the key rate. I'm going to really stand for it. Macroprudential measures against inflation is counterproductive, because the inflation targeting regime, to a very large extent, it's managing your expectations. But when in terms of the instrument which has been designated for other purposes, we start use for these ones, we'll lose clarity in communication, and we may end up with the inflationary expectation and this effect. But having said this, I cannot keep saying a certain other thing. We do apply macroprudential regulation as an instrument in order to limit the accumulation of risks inside the banking system, from the fact that the banks may get carried away by issuing big loans, and this may produce also, in effect, over the overall lending activity growth. We do take into account, but the ultimate purpose is to limit the risks. As a consequence, it may also impact the lending activity, and we're going to continue to act in this way further. And by the way, we're currently being worried by the accumulation of risks in the corporate lending area. We don't have any macro proof, and we are discussing it right now. We came back to this topic. Maybe we should also specify in the potential regulation, so that the risks that are related to the very lengthy accumulation of debt by some companies could be taken into account, because it may indirectly impact the lending activity growth. Now, all right, maybe you'll add a few words about the macroprudential part of it, and then I will talk about the soft monetary policy. All right, Grigori, thank you very much for your question. We hear it more often than usual lately. Another important aspect that we always remind people of, macroprudential measures, they only can be found within the lending part, and they can affect certain individual parts of the loans. There's nothing in the way for the bank to reallocate their credit activity from the segment of the economy which became subject of a tougher macroprudential measures into where it can see credit-worthy and attractive borrowers. But another important consideration is that the macroprudential regime doesn't impact the deposit channel at all. It is simply not in a position to impact the saving activity at home. It can only be impacted by our key rate and the inflation expectations. If the inflation expectations are high, and if one tries to use certain other measures without responding via the key rate, we'll end up having a very strong spiral of hoarding. When people will try and insure themselves from the inflation losses, then will start buying anything from a stove all the way to the new apartments. So as far as the fiscal and monetary policy interaction is concerned, when we have been going from 2015 to 2019, we've been really strongly helped by the normalization of the fiscal policy, by the reduction of the fiscal deficit. Those were important things to happen. But nevertheless, history knows other cases, successful cases, when a monetary policy is able to achieve the inflation reduction even against a soft budget policy. Just remember the end of the 2017, when Paul Volcker was reducing inflation. The U.S. deficit has been growing. It was below 2% when he started raising the rate, all the way up to 6%. I mean, the budget deficit grew. The Federal Reserve raised the key rate to 19%, and they succeeded to reduce inflation. I recall such cases in Brazil, in India, and very recent one, post-pandemic, both in part of Fed and CB, Central Bank. In the United States, there are growing fiscal stimuli, and through the raising of the key rate, the U.S. banks and the European Union were capable of significantly reducing inflation. And so the basic element is the key rate that we're talking about. A brief remark about the U.S. experience in the beginning of 1980s, so that you wouldn't be erroneously thinking, how come they've got such an enormous budget deficit and they have enough of 19% level, which used to be as intense in Russia. An important thing, it was then that even now is the case, there was no similar kind of an amount of the subsidized lending available. Thank you very much, Anna Kalina, in the last row. Right, I also have traditionally two questions. The first one is about Sergei Shvetsov's proposal to use resources in the C accounts to invest into the Russian securities. And Minister of Finance is saying that new investments by non-residents in Russia, people from other countries, are going to be subject to various restrictions. Do you support this, I think? And my second question, I'm just being curious. Mr. Peskov said that somehow you dislike the banknote, the BRICS banknote. Did you not like the design or the idea itself? I understand that this is not the idea for today or tomorrow, but basically speaking, is there such a possibility? That's basically it. In as far as the C-type accounts are concerned, to have the friendly non-residents investing into the Russian economy, I believe that it was a response measure to the freezing of assets belonging to government, the banks, enterprises, households. I believe that it should stay as it is. And using this resource, it is impossible to create some sort of reliable investment project. We need to create for the Russian businesses as well as foreigners and non-foreigners. Well, anyone who wants to invest in the Russian economy, we together with the Ministry of Finance believe that conditions should be made for non-residents if they started investing as of that year, they continue reinvesting into the Russian economy. And that is why I'm not very supportive of the idea of using the C-type accounts for such kind of investments. With regard to BRICS, first off, I don't believe, we are at a different technology level. To have paper money, if we are to talk about that, then we should talk digital and technological. There are regular proposals that we hear to speed up the issuance of some sort of a single currency. It's a complex process. If you take a look at the currency history of different countries, you will see what kind of harmonization and integration that first should take place in different areas in economics and finance, of course. But we're naturally discussing the development of payments using national currencies and utilizing different technologies and platform-based solutions in order to ease trade and investment between our countries. Thank you. Next question from Vologda, from Alexei Tretyakov, the Grozny Sever Gazette. Good afternoon. The Bank of Russia has always been assessing the risks of the broad availability of the subsidized mortgage program nowadays, when some of them have been suspended and in others terms have been strongly changed. The demand for housing went down. The regional developers see that they effectively have put on hold any new projects and are working only with those which they had started earlier. Now, isn't there a concern that it is going to be very difficult to revive the construction industry? And still, against what kind of conditions the central bank believes the affordable housing is going to be really there and the prices are going to be going down? Yeah, thank you very much. You very correctly stated it's affordable housing rather than affordable mortgage funding. These are related things, but this is not one and the same thing. If you've got expensive apartments and your mortgage loans are going to be at zero rate and your wages are growing slower than the housing prices, then there is not going to be any affordable housing. Oh yes, the demand for housing is going to be more balanced under the impact of the suspension of the mass subsidized mortgage, as it used to be the case before the start of the mass subsidized mortgage. And whatever looks like a significant decline in both sales and mortgage loans, effectively this is going back to a more valid level of housing demand. The growth of mortgage is slowing down, but this slowdown is from very, very high level. I can remind you, we had this growth at 30+%. So such, speed, such a rate should not be expected to last long. To always consider that it's going to be, 30% for perpetuity. No, 8 to 10% growth in mortgage portfolio is what we expect. This is indeed the growth in the mortgage portfolio, and taking into account the securitization based on what our experts think this is going to be 11 to 14%, which is a normal kind of pace which shouldn't provoke a faster housing price increase. I mentioned the affordability of housing. Remember I told you that over the 4 years of the subsidized mortgage, housing prices almost doubled, and that was far ahead of the growth of wages and inflation. Now, the basic way of ensuring housing affordability is the growth of incomes, which are growing ahead of the housing price growth, and the moderate market rates can only be possible against a low mortgage interest. And actually, we currently low inflation. I'm sorry, mispronounced. So currently, we see that people started buying more often for themselves using their own savings. Because you can see it by the way the escrow accounts are being done because of the loans right now. It comes, 50% is from your own resources. But going back to inflation, the mortgage rates again are going to go down, and we see our task to make the mortgage rates moderate for the mortgage to be affordable in without the subsidized components. For the developers, that would mean a more moderate activity level. But I believe that our developers over the past few years have been able to demonstrate that they can adjust very quickly. First of all, they have accumulated a very nice safety cushion. Now I can give you the statistics in order that you understand that they have certain buffers that they can rely upon. Over the past year, the profit in the construction center industry almost fivefold was above its 2019 annual profit before the subsidized program was introduced, so fivefold. But throughout the economy, this level of profit grew only twice. So in terms of there being any consumer cooling over the past 4 years of booming, didn't happen. But I do say that the construction industry will be able to cope with it. Maria, please. Maria Filushina Bitkogan. The Bank of Russia held already 2 meetings in a row, and it raised the key rate as well as tried to, through this, sending a very tough signal for the future. My question is, why should you keep on riding this enjoyable experience? Because quite often people rush in to take more loans, expecting the key rate to grow further. Well, I wouldn't describe it as a partial increase. That was the kind of decision which corresponds to the current realities. And raising the key rate is not something predetermined. We do allow for such an eventuality, but if we see a considerably substantial slowdown of the stable inflation, I can even put it that way, and adjust our forecast, that may not be then necessary, and to raise the key rate in advance and putting some additional capacity into it is not right, particularly when there are so many uncertainties, because we additionally need to assess the outcomes of our decisions. These effects can be seen with a lag because we are looking into how the transmission mechanism is concerned. Full impact upon inflation takes several quarters, but that particular impact starts being felt also during the initial periods. Now, as far as the possible loan demand is concerned, it seems to me that, for example, if we talk about the corporate loans, the companies should themselves be able to assess the risk, whether they are ready to take more loans, whether the key rate is going to be raised, when it's going to go down, and assess their capacity to take long-term loans via the mid-term outlook. Now, honestly speaking, I don't see any big factor here. Partially it may manifest itself once the demand is moving from right to the left, that people are quicker in taking loans and expect the key rate to jump. Alexey Borisovich, could you please add a little bit? Well, generally speaking, we do not really share. This is not anything common. That the businesses take more loans once they start expecting higher rate. That is not being confirmed by the data. How can you verify this hypothesis? If it were to be the case, the businesses would have been active taking loans at a fixed rate, because you can save. Alexey Borisovich, yes, they would have definitely be willing to take it, but who's going to give it to them? No, I mean to say, if somebody believes that the fixed rate is going to be high in the future, they would take a loan now. But if there is no big appetite towards the fixed rates from the businesses, be it for 5 years or even 6 months, then essentially it's very difficult to see such motivation because it doesn't make any sense to take an advanced loan at the floating rate. You will take it only once it is fixed to a certain level. Yet, because most of the lending is being done at the floating rate, it really doesn't make any sense to run and take a loan now. Sergey, please. Sergei Bolotov, Russian Gazette. Further about the available housing. Why, after the subsidized mortgage was suspended, there is no narrowing of the gap between the primary and the secondary housing market prices? Is it going to be staying like 50% as it is now, or you simply need to wait for it a little bit more? My question also, Sergei Moiseev in the Ministry of Finance was heard saying that the cycle of the key rate rises will be finished by 2030. I would ask Mr. Zabotkin to respond to this question. Besides me, our forecast is that by 2027 we'll come to a neutral key rate in the range of 7.5 to 8.5. Why not really planning to stretch this enjoyment further? Well, Alexei Moiseev, I bet, will be in a better position to comment upon his words rather than us. But he didn't say that the cycle of the key rate reduction is going to be extended to 2030. What he said was that by 2030, the process of easing the monetary policy will cover its full journey. But it doesn't mean that it's going to be stretched up to 2030. It's just that it is going to be completed within this particular period of time. And the governor said by the 2027, if the inflation goes back to the target, then our key rate also goes back to the neutral rate level. And as far as the subsidized mortgage lending suspension is concerned, first of all, we see from the point of view of the overall mortgage lending dynamics, it becomes more balanced in terms of its development. But from the point of view of narrowing the gap between the prices in the primary and the secondary market, something that indeed was a concern to us, and we do believe that it was one of the consequences of such a lengthy existence of this mass subsidized mortgage program. Well, first of all, yes, indeed, not so much time has gone because these deals have been concluded over the past several months upon the terms which have been reached over the previous several months, because mortgage loans is not something that is quick to be done. This is one of the factors. Well, the second one, I already referred to the financial cushion accumulated by the construction industry. Some of the developers, they can adhere to the following position: maintaining the price level instead of even they reduce the offering somewhere instead of reducing the prices themselves. And so the third point, something that we regrettably do acknowledge, nevertheless, an abundance of all kinds of intransparent schemes which result in high housing prices. So unfortunately, such schemes do remain. They evolve in terms of the way they appear. We very much count upon the mortgage standard that the banking community has agreed upon. But if this standard doesn't work, and that is something that we have been talking about as a bit of a threat, if the banks don't comply with the kind of standard that they have previously had agreed upon, this standard, very probably, we would either have to inscribe into the law, or we're currently also discussing destimulating the banks through different kinds of measures, like elevating their adequacy requirements or reserves, so that the banks wouldn't feel that it would be profitable for them to misbehave. So, based on the preliminary data, we can see that most probably in the primary market throughout Russia and in some of the regions, there is a price reduction that has been set off. So if that forms a trend, that will definitely narrow the gap that you're referring to. Thank you. Thank you very much. The next question from the city of Kazan, from Igor Nikitin, from the newspaper called The Republic of Tatarstan. The economies in some of the Russian regions and in Tatarstan is very much packed to big industrial enterprises. In the case of the long period of high key rates, isn't there a risk of overcooling of the industrial output, deceleration of import substitution, and the supply in the market becoming worse? Well, what we come from is that the economy is going to continue growing, but at a more moderate tempo, and its structural reorganization will continue related to import substitution, amongst other things, and with the automation, with growing labor productivity. As far as labor productivity is concerned, by the way, we see that it is higher than it used to be before the pandemic. So hopefully the investments done do generate return in the form of labor productivity throughout the whole of our economy. But the structural reorganization shall sustain, which means that some of the sectors will stand a better chance to develop. For example, if they take up the niches which previously had been with the foreign businesses, these companies can demonstrate double-digit growth. If you take a look at the sectoral growth structure, we do have big differences in between different industries, inside industries. So certain businesses do demonstrate different pace of growth. But there are also such companies, the demand for whose product is going to fall. This is inevitable in a structural reorganization. And for the resources to be moving into the sectors that demonstrate high growth, they would either need to look for new niches, new opportunities, develop new business processes, be more active in labor productivities, as businesses themselves are saying. There are very big reserves which are not always related to investment processes because the business processes themselves and the optimization thereof may generate high labor productivity. So either they will have to look for new niches or reduce output, and that would inevitably be impacting the restructuring in the economy. Thank you. Rita, in the third row. Margarita Mordovina, RBK. There is a common opinion that in order to fight inflation, it is impossible to raise the key rate endlessly. There is a certain highest point beyond which any raising won't work. If not, then it should be accompanied by a very tough fiscal policy. Now, what do you think? Where is this most highest point beyond which the high key rate won't be effective? What kind of, is it 25, 30%? Well, I feel that there is no such point. So it doesn't make any sense to talk about it. But in terms of our interaction with the fiscal policy, I already mentioned it, that normalization of the fiscal policy next year, it is going to take place. We very much hope in accordance with the announced decision. That would be something that would be playing up to this inflation, definitely. But even against the soft fiscal policy and the softening fiscal policy, the tools of the monetary policy and the inflation targeting definitely can help to achieve low inflation. Anastasia, in the second row, please. Hello, Anastasia Bashkartova, Независимая Gazette, Independent Gazette. I would like to ask you to elaborate on the previous statement that was done by Mr. Zabotkin in one of his interviews that under the current economic conditions, the high key rate will be conducive to helping economy get rid of the ineffective businesses and the reallocation of the resources in shortage towards those which are more priority. Now, my question, do you see now that the economy is getting rid of inefficient companies? If not, when will it start? In which industries? And what does it mean? Does it mean that one shouldn't start waiting for insolvencies to start taking place? Well, all right. I guess I'll first will try and give you an answer, but then I will pass the microphone over to Mr. Zabotkin because he has provoked you to raise this question. Now, with regard to the redistribution or the reallocation of resources from one sectors or industries towards others which are more effective. This is something that could be visible in the subsequent labor productivity growth, because like I mentioned previously, we already see that the labor productivity growth this year is higher than last year. In the first half year, about 4%, and higher than in the pre-pandemic period. And the second thing that I would like to draw attention to, this redistribution of resources, not necessarily that would involve insolvencies. If businesses are making their decisions timely and exiting from the assets, if they do know how to place it into the hands of those who are more effective in managing this, that can be done without the insolvencies. Am I right, Mr. Zabotkin? Generally speaking, yes, it's difficult for me to add anything on top. It is true that the process of this overflow of resources into more effective, clearly, under the conditions of the tough monetary and fiscal policy, this is a natural thing because of the market shares continuously being redistributed, but in no way that means that all those who reduce their market share they go south. No, business-wise. No, it's just that the market share is being redistributed. Maybe those who reduce the size of their business are exiting from some of their assets, selling it to those who have free capital and who are less dependent from their debt capital and who are in a position to fund their development out of their own pocket. This is a very much multifaceted process which takes place in any kind of an economy under such conditions, because once all of the resources are being used in order for the economy to continue moving, this can be achieved only by all of us somehow becoming more productive and better at the job we're doing. And amongst other things, it also very much and strongly depends upon how production processes are organized in any particular business or in any particular company that is employing you. And that is why the labor resources will be redistributing there, as well as the financial resources will be in the hands of those who are able to pay and demonstrate higher profitability in return for those investments. Right. And I also would like to add here it is very important not to de-incentivize businesses in order for this flowing around to take place, because that won't happen if we keep on supporting afloat the companies which are not able to demonstrate high efficiency. So this redistribution must take place. And the best redistribution is the market when the supply is following demand. Of course, the government has a certain bailiwick in terms of its responsibility in restructuring, supporting new technologies where there are a lot of risks, but it is very much important to stay away from supporting companies and businesses if they're not willing to transform. Let me add a couple of words on top of it. Effectively, this is the first episode when we find ourselves truly in an overheated cyclical kind of an economy. All of the previous kinds of episodes where we ran through the periods of high interest rates, those were because of the external shocks and because of the economic slowdown that was in 2008 to 2009, in 2014 to 2015, 2020 till 2022. And that was why, of course, the businesses do have a certain inertia in their mindset, thinking that during the previous periods, the government was supporting everybody in order to compensate the consequences from such shocks and the high level of interest rates, which was related to the risks to the financial stability, and therefore you can carry on right now. But the current economic situation is in a totally different point in terms of its trajectory of sustainable growth compared to the previous periods when anti-crisis stimuli were being used that we have grown used to. Right now, there aren't any. And that was the last question, dear colleagues. Sorry, we have taken more time. Thanks very much to our speakers and to you as well. Thank you so much.